Okay, I'm gonna try to go through these as quick as I can. As usual, check out my Twitter here at Bike for Sale. I've got a couple of things that I posted recently that you may not have seen yet. If you want to follow me, just over my name, click the follow button. You'll find it there if you're logged in. Okay, so I guess just a recap on some of the ones we've been talking about, like Doge. And I do want to touch on this indicator down here that you may not have seen before. But if we step out on the Doge chart here, and of course, this was the buy area. I don't know that it'll come back down here, but it could. It could just ride back down this line. We don't know yet. Currently, we are in negative money flow on the daily, so it heightens the chance that we could come down one more time. And there is there's kind of some support right there. So I would suspect, if you're looking for a place to buy it, something like 06378 would be a good point. Or if it comes back down here to the 06 area, I really don't think it's going to get below that, but we'll just have to see what happens. What you're looking at right here on this indicator, I'll just explain what it is real quick. If you search for HARSI, it's this one right here by Jay Rogers. And what this is it's a combination of RSI plus the, what's that oscillator? Well, it's an oscillator that combines RSI and Heikin-Ashi candles. So if we go to this, you got two things up here. Actually, you got a bunch of different candles you can use, but the two main ones are just regular candles or Heikin-Ashi. And if I switch to Heikin-Ashi, it's going to look completely different. Because the reason it looks different is I don't really know the whole story about Heikin-Ashi, but once it gets momentum, strong momentum going one way, it's hard for it to reverse direction. And that's why you're seeing a lot of these, more of these are green than red, and more of these are red than green. It's a much bigger move. So they work real well to tell if your coin has a lot of momentum behind it. And if you switch it back to this one, you've got a lot of like a mixture, there's a lot of red here. There's a lot of green here, but there's kind of some red mixed in with the green, even on big moves up. So if we go back to that indicator, what you're looking for on this, and here's my settings, by the way. I think I may have some settings that are a little bit different. So you can pause this and use the exact settings I have. I don't think I changed it a whole lot. Okay. So we have a long-term downtrend line that we broke out of on Doge. That's why I liked it. It also broke above the 50 line here on the HARSI, which is going to be the exact same thing as the RSI line. If it breaks over the 50 line, then it's bullish. Currently, we've still got negative money flow. So if it was moving into the green, I'd feel a lot better about it. But currently it's trying to curl down just one more time, I think, on the negative money flow, and then it'll curl back up. So that's why I think we could come down once more. So if you want to wait for a buying opportunity somewhere in here, there might be one. Yeah, so that's pretty much Doge there. I think we are at the point where it has found its bottom, though. And, a spot play here would be fine. Or if you want to wait just a little bit to see if it comes back down. But if it was to, from a market structure perspective, if it was to get back above this area right here, like say it moved up and then sat back down and then moved up from there, then that would be definitely a point to take along, because that would be a higher high. Gala is one I just posted today. You can kind of see the same, the same thing here with the HARSI. It broke above the 50. You got a lot of green candles here, which are basically Heikin-Ashi candles. I'm using regular candles here at the top. We broke through a strong resistance here, and it's up against another resistance now, so it could come back down first. You're still in the red money flow. Once it turns green on the daily, you're feeling a lot better about it from a long-term perspective. But what you're looking for on the HARSI right here is it works a lot like a stochastic RSI, where these two fast and slow lines, the blue and the red, if they were to curl down, especially if you had a red candle here with a curl down, and I'll show you an example, like right here, you had a big move up, And then it started kind of flattening out here in this red area. See how this red area here? So the way I play it usually is once it gets into the red area, no matter what time frame you're looking at, then I start thinking, okay, when I start seeing some red candles on a higher time frame, that's going to tell me that I need to think about taking profit. And it took it a while. I mean, it kept going up for a while. On a daily chart, what I would have looked at is, number one, you got a cross down right here. Usually you don't get a big move down until these two lines cross back over the 50, or at the very least, these red candles are crossing below the 50. But if you want to catch the move early, usually what you want to watch for is a group of red candles, or it goes from, going from green to red the first time, sometimes just a warning. It doesn't mean it's going to go down right away. You had another cluster of green candles here, and then it went red again. And then finally, it started rolling over more. And your question might be, well, how do I do this without getting faked out? Well, there's a couple of ways of doing it. You could have gone ahead and put a short in and just had a tight stop loss at the resistance, or you could have waited until it started rolling over more, or it started rejecting the bottom of this red area. You had a lot of wicks running into that red area there, or you could have gone down to a lower time frame. But sometimes I put shorts in and I get stopped out. I just wait for another opportunity and then I enter again. I mean, there's a lot of different ways you could do this. You could do trend lines like this. And so when this trend line was broken, I would have said, okay, this is definitely the top. And here's another way to do it. If you would have had, I think your support resistance line is kind of right in here. If you would have had something like this, where there was a lot of resistance, it broke back above, and then you really have to go down to lower time frames for this. But if I went down to a lower time frame and I saw that this broke down and then rejected, then I would have shorted right there at the resistance. So, and my stop loss would have been somewhere up there. But if I go down to like an hour, if I can find the right area I was just at, I think it was back over here. Did I put that? Sorry, let me go back, and I got to find that point again. I got lost on it. Okay, here it is. So what I'm going to do is I'm going to put a little mark here for myself. And I like the hourly chart. It's one of my favorite. It just seems to be kind of the best of all the indications you can look for. And all this is it's a break above resistance, and then it falls back below and it retests. And you could have had this trend line right here. And the trend line could have been used in the same way as well. So the sooner you can draw the trend line, the better. And here you would have drawn it probably right in here somewhere, because you had one hill right here and then another one. And so once you had this line, anytime it rejected at that line, you could take a short. If it got back above with a full candle, you could close it, or take a long from there. But that's what I was saying. There's a couple of different ways you can do this. You had close to a rejection right here, had a rejection at the line multiple times. But when you get under this line right here, this horizontal, what was support is now resistance, then that's the point you could have taken your short. And maybe the hourly wouldn't have been the perfect one to use in that case, but you get my point. You want to look for these specific instances with using trend lines. And where'd my line go? I don't know where that line was. Oh, there it is right there. Yeah, so this is the 3 hour. And this is a perfect rejection right there. So yeah, you would have missed the first short, but you would have come down, touched your support. You could have taken a long here at your support and then rode it back up and taken a short right there. That's why these horizontal support resistance are so important. But here's the clear, falls through. I mean, Actually, there was even a rejection right there. And sure, I mean, this is hindsight. Anybody can look at this and sound like a genius, but you're not going to hit the trade every time. Sometimes they're going to shoot a wick up real quick and knock out your stop loss. Sometimes they'll do it on a long, and there's no way you're going to get every trade. But if you can stay about 40% correct on your trades, then you're going to be very profitable. But you can clearly see that these things play within a range, and that these trend lines definitely work. And then obviously you can always use your EMA as well. I know I said I wasn't going to make this one long, but it's already starting to get long, isn't it? So I need to speed up here. But just remember, on your EMAs, you can use 1221, and on any cross down, like on a 3 hour, the cross down is going to be kind of delayed, almost like you were playing a daily chart versus, like 1 hour, 3 hour, you could play those together, or 1 hour, 15 minutes, or you could play the daily in 3 hour. But you always want to start at a high macro time frame and then work down to the lower one. So yeah, you could definitely use the 3 hour, but all of your drawing and everything would be done on the daily chart, and then you just adjust it on this 3 hour chart. But clearly, it crossed down multiple times. It's just on a 3 hour chart. When you get the cross, sometimes that's the bottom already, but sometimes it's a really good entry as well. And that's why I like to step down to the hourly at the very least, is because the EMA crosses down a lot more quickly. And then one other thing I want to point out real quick is the HARC, just to look at it, because I want to show what it looks like when it hits the top. It's kind of right here. All you're looking for is for these green candles to enter the red, and then you look for the first red candle. And if it starts putting in green ones after that, then just wait for another red candle. And then on the flip side, what you want to look for to take a long is you want to see the red candles get down in here. Red candles get down into the green, and wait for the first green candle. So if we put a mark there, that was a pretty good long. I mean, it did reject eventually, but you would have got a 3% move out of, I don't know, 15-hour play or something. I don't know. No, that's more than that. It's about a day play. But anytime you rejected the 50 line here, like it rejected right there, and then put in a red candle, then you know it's coming back down. And then if you get back above the 50, especially with a lot of green candles, then watch for it to hold. You don't have to take this first trade. You want to see if it's going to hold right there, and it didn't. So you just wait for another long here. It keeps rejecting the 50. It's still rejecting there. Okay, right here is a pretty good one. So on this one, you had a cross up of these two lines. You had a green candle get above. You could have taken a trade somewhere in here. And what you would have watched for is for it to come back down and touch one of these EMAs. So it's good to use these things together. You really don't need market cipher, the 1221 plus this one right here. They're pretty good indicators. And what you would have waited for was the first red candle there. You could have taken profit from this move and then put in a short. And then when you saw it rejecting at the 50 and staying above it, you could have gotten back in right here. Your 1220 or your fast and slow right here had already crossed up, and your 1221 stayed above. And really, I misspoke there, because if you're already in this trade and the 1221 doesn't cross over and cross down, then just go ahead and stay in the trade until it does. So you could have gotten out there, or you could have gotten out right here once the green got into the red and put in a red candle. But again, it's not easy in real time. I realize that. I make mistakes all the time. It's who can be the most disciplined and stick to their guns. If you've got if you tell yourself, I'm going to use horizontal support and resistance, I'm going to use trend lines, and I'm going to use the 1221 EMA and this HARC indicator. And if you stick to that and you have specific rules and you never break them, you're going to make a lot of money. I mean, it's really down to who can stick to their rules the most. Okay, so thinking about those rules, let's not even think about market cipher. Here's mask number one. Number one, what we're looking at is we're above. Let's just consider price structure first. So we're going to look that we're above what was once resistance, and now it's support, and it retested it at one time, almost twice, and now it looks like it could be moving up. This is masked, by the way, if I didn't mention it. You do have a cross down here of your fast and slow on the Harsi. However, you have multiple green candles that are above the 50. So your 1221 is above, that's bullish. So what you could do if you haven't taken a trade on this one yet and you want to go long, wait for these candles to come down and at least touch the yellow 12 EMA. You take your long there. You ride it up as long as the 1221 is still above each other. Once the green candles get up here into the red, if they do, right now they're rejecting in that area. But if they do get up there, then, and price could be way up here by then, but that's the point you want to look for a red candle, after a green candle. And then you check your 1221. If it looks like it's rolling over, you can go ahead and take some profit, or just wait till your 1221 crosses down like it did over here. Let's see. Okay, so that's mask. That's the daily. I'll just look at the hourly real quick just to give a different perspective. It did come down and retested this area. You do have one red candle here currently. I don't really trade it when it's in no man's land, when it's in this blue area, unless the 1221 crosses down and I want to get out. But you do have a cross down here of the fast versus slow stochastic type thing there. There's really nothing that you can figure out here, I don't think. It just seems like it's going sideways currently and maybe a little bit up. So if it were me and I wasn't in this one yet, well, it did hold the 1221 a lot on this 3-hour chart. So look at multiple charts, and it is holding the 50. So, just judging by this, if you did want to enter, on the next touch, I think that would be fine, but just be aware it could go sideways a bit. All right, let's look at some shorts real quick here. This is an example of how trend lines can work to your favor. So I'll look at those first. I drew this trend line way back here, where these two connect. And I was waiting for a short opportunity. And by the way, just as I'm talking about that, here's Harsi, green to red. That would have been a good short. And then you could have just, closed your position right here at the 50 line. And since you saw that it was holding above the 50, you could have taken another trade once you got a decent candle like right here. I mean, these were you weren't real sure about them. And then you would have waited until it got back into the red again. Sometimes the move is going to be, the move had already happened once this went from green to red. So you're not going to catch every one of them. Anyway, one thing you could have done here is the trend line was going up. As soon as the trend line was broken and got retested, just take your short. It's really simple if you stick to the rules. And I don't do it all the time either. I need to. 1221 also didn't cross until here. So either you could have taken a short there or a short at that cross. But notice how, this is something you should be aware of. Notice how sometimes once the 1221 cross happens, it has already put in a temporary bottom. So what I would say is wait a few candles and see if it comes back up and retests your, what was once support is now resistance. It retested that perfectly. You could have just went ahead and taken a chance there and had a really nice short, really good entry. And this was, I think this was actually a trend line that I drew yesterday. I was just kind of testing it out because this was like a type of support on a trend line, and it came up and retested it. So I just went ahead and drew it, and it's mostly held, but now it's getting pushed down into support. So in this case, you'd probably want to be watching for a long, but with Harsi, you want to wait until the red gets down into the green. And again, you're under the 50, it's bearish. you don't want to be taking a trade in no man's land here in the blue area. So just wait until all your red candles get down here into the green, and then you finally see one of these candles turn to green. And especially if you get above this trend line right here, you know, it'll push back up, but it may only push up to here, you know, because this was the, remember, this coin went up like 11x. So in my opinion, it's better to be looking for a short with this one than a long, but it could have a temporary short push up. But I would really expect something like this if it was to, you know, something like that. And then eventually it's going to break down right there. But there's a lot of support there currently. So I'm really expecting it to come back up and grab it. And it could even come just a little bit up to throw somebody off, you know. You know, maybe they entered right there at that line and they put their stop loss real tight and they want to grab, the market makers want to grab that liquidity before they send it down. Just see what the daily chart looks like. Yeah, so the daily chart continues to reject right at that trend line. You're sitting right on your 12 on the daily. So if you were still holding this coin, it would be fine to hold. You could wait. But here's what we're looking at on the Harsey. You've got your first red candle. And although it's an indecisive candle because it's kind of, you know, it's not filled in like these, I would say within the next couple of days, you're going to see it fall below here, I would suspect. And then there's another support there, another one there. So I would guess it would come at least down to the blue line and then push back up, and then it's just going to work its way down eventually. I mean, this thing's just run so long. It's had a massive move. All right. Yeah. So, I mean, as far as shorts go, if you like to short like I do, this is definitely one I'm keeping my eye on. And, oh, Astra. So this, I wasn't done talking about the longs just yet. This is one we've been looking at a whole lot on Twitter. We've got a lot of people following this. They're very interested in it. In general terms, you know, I really expected this, you know, this head and shoulders to play out and at least go back to the neckline one more time up here. And it still could, but it's stalled here and created kind of a triangle. So I'm not real sure what's going to happen just yet. We're definitely in no man's land. If we break out above, well, number one, if we hold support one, S1, then we're going back up here somewhere, you know, maybe here, maybe up to here, and then falls back below it one more time. But if you close below this trend line right here and below S1, then at the very least, you're coming down to S2, and most likely it's coming down to S3. It's just lost a lot of momentum for whatever reason. There was a lot of consolidation here. You can see, had you been watching this one and it was coin you really wanted to enter, you would have, I mean, likely you would have entered here and you would have made a little bit of a profit, or you would have not taken your profit and rode it all the way back down. One way you could have known that it was coming back down was this cross right here. But just remember, on RSI or this Harsey indicator, whatever it is, if it's under the 50 line, it's bearish, and it's not bullish again until it gets back above it. And that's why I had high hopes for this one, is because it's holding above the 50 currently. You know, it kind of dipped below it a little bit, but then it came back above. So really what we need to see are these two lines here to cross back up soon. Let's just see what it looks like on a 3-hour chart. Yeah, on the 3-hour, it's rejecting at the 50 currently. And then here it got back above on the hourly, dipped below quickly. So you really need to see it. I mean, this thing's been working in this triangle for a while. I'm leaning towards it getting bullish again. I mean, the only reason I say that is these quick flush outs like this, where there's a lot of demand, it looks like, in this area because it's a big wick. Of course, the candle hasn't closed yet, but typically when something like this happens, as long as it closes like that and looks like a reversal, you know, because it did roll over just a little bit, it'll usually push back up. So you really need to see a good move above and then a retest and then a push back up. I don't know. Something just tells me I kind of feel like it's going to go back up, but don't use that as trading advice. I mean, don't trade based on that because I don't know that. Nobody knows what the price is going to do, especially on a low time frame like this. It's just really hard to figure out right now. I don't know if the weekly would tell us anything. No, not really. Okay, so that's Astra. I mean, not really a whole lot to talk about there other than you had a higher high, higher low, but then now you have a lower high and you need to get back above that. So we've got to at least get back above resistance one here. That's what R1, R2 is. But what I'd really expect to see if it did get bullish again is, something like that. Maybe it plays around in here for a while and then takes off. Just remember, if you're new to trading or even if you're experienced, you have to keep in mind that the market maker's job is to liquidate as many people as possible, or to at least go where most of the money is. And that's usually going to be where liquidations are. So the stop losses, either way, long or short, you just need to think in those terms. Like right here, this is a good example. This is resistance currently, obviously, but a lot of times what you'll see them do is come up to resistance and make it look like it's going to stop, and then all of a sudden they shoot it up, kind of like this wick right here. They shoot it up and then take it right back down. And what they're trying to do there is anybody that was short in this area that had stop losses just above, because it's a lot easier to have a stop loss tight like that. You lose less money. Then they'll just come up there, grab that liquidity, and then they'll send it right back down. And same thing down here. You can see there's these long wicks. People saw that this was support, and then right before they sent it up, they wicked it down one more time to grab all those stop losses. So just remember that when you're trading, you need to consider those things as well. I mean, it happened down here also. Before they sent it up, they stopped a bunch of people out. And now all these people that had great entries, maybe they had an entry right here at support. They had all these great entries right here. They lost them all before price moved up real hard, and they weren't able to get back in most cases. But what you could always do is wait for the retrace. You just got to be patient for it. Okay, just a few more shorts and I'll close this out. Here's a really good example of how they push it up above resistance to grab that liquidity before they move it back down. And I think that's probably what's going to happen here. But again, I don't know for sure. You're looking at, this is a daily chart. And then over here is a 15-minute chart of the same coin. I don't have Harsey on these just yet. But if you're talking about just price action in general and market structure, XO is really good about this. Trader XO, if you look him up on Twitter or if you look him up on YouTube, he's one of the best at teaching this. I could really drop this resistance line down to here somewhere where there's more candle bodies, but I kept it up here because that's where all the swing failure patterns are. There's a couple different ways to look at this. Either it comes up here and holds this and then it takes off, or you get a close back below it, it retests the line, and then you got your short. And that's kind of what I'm expecting to happen. Let me just see what Harsey looks like. But that's why I have the 15-minute chart here, is because I'm expecting this candle, either it just reverses from here or it stays below this line. And this line is more of a zone than just a specific area. So just be aware of that. It could come above it just a little bit. If it was going to reverse and stay down, then it would only come up to somewhere around the blue line there on your EMA. Let's see. Yeah, so you have a fake out up, it comes back down, rejects, and goes back down. That's what I'm looking for. And I'll just play this range, if that's how they want to keep running the price action. But that's a massive range. It's probably more likely that, you could use your fibs here and just come down to the $1.35 area at that 50% retracement, take your profit there and let the rest ride. or come down here to the golden pocket. You know, you don't have to get too greedy. At least take 50% off the table if you're just scalping. All right, let's just bring the Harsey in. I haven't even looked at it yet. So the daily Harsey, it has been pushing up a lot. I'd feel a lot better if it was like really strong into the red right here, but it did push into the red, and there is a red candle there. Definitely need some more information, but you did get a cross here. You got a cross down if you're fast and slow. And then if we look at the Harsey, I really don't know if I should look at Harsey on 15-minute, but I will. Yeah, it's clearly under the 50. It's bearish on the low time frames. Probably better to look at the hour. Yeah, clearly it keeps rejecting at the 50 like it did back here. So I feel pretty good about it right now on this short, and I have taken a short at this position at about $1. I don't know, it was about $1.73.6, something like that. So that's the breakdown of that one. And I wanted to break down this one that I played yesterday. I kind of made a mistake on it, but you can learn from my mistakes here. Well, we'll just start out with price action first. So here's what I was looking at. This was acting like a lot of resistance here, and about, I think right here, I took a trade about 2 o'clock yesterday, and the reason why I took it here is I kind of played it early. I thought that they were just sending a wick up into these wicks right here, and I was gonna, be cheeky and take a short right there, thinking I could get the very top, and it didn't work out for me. They pushed it higher, and they actually hit my stop loss. And so what I could have done was, when I saw it moving back up, I could have just waited. I mean, there's another area of resistance right there. You could have just used these wicks. You could have even used these 2 wicks right here, or gone down to a lower time frame. So I could have actually put it there without that other information and said, okay, here's some more resistance. Here's the zone I'm watching. They pushed it above. It came back down. It rejected multiple times. And then I could have started drawing at that point my trend line and said, okay, if this trend line breaks down and then comes back up and rejects it once more, then I'm just going to go ahead and take a short. Or here's another thing you could have done. Harsey actually gave you the first red candle right here, after a big move up. And you could have waited on the second candle, let it come back up and retrace that 50% of the big. Usually I'll do that a lot. Like if there's a big breakout candle, or if there's a big breakdown candle like this one, see how if you took a fib right here from this candle down to, well, even if you just took the candle itself, what's the 50% retracement from that move down? It's about $4.78, and it's almost there right now. Usually on these big candles, it'll come back and retest it at some point. Maybe it's not right away, but usually it will. And so to me, this looks like a bearish, kind of a bearish move, I guess you'd call it a wedge. Yeah, it's kind of forming a wedge. It's getting tighter as it goes up. And maybe it's rejecting now. I don't know, but it's kind of near this 50%. It doesn't always hit 50% exactly. But notice how on this breakdown, where the Harsey gave you the first candle on the hourly, I mean, it went way down. You wouldn't have wanted to take that short even on the candle close, because that would have put you shorting right at support. So instead, what you would have waited for was one more hourly candle, let it push back up at least 50% of this candle. And if you wanted to wait for the candle to close first, that's fine. But you can see, even if you would have taken this short right at the candle close, they were still playing around with people that were putting stop losses real tight. So I would say on your stop loss, like if you would have taken it from this candle, I always at least do a 5% stop loss. And even then, look at that. They would have come real close to stopping you out. So maybe do, 5 to 10% just to be safe. But at this point, you're rejecting a lot at this resistance. If you want to be real safe, you would have waited until this right here, this uptrend line, broke down, and then you had a lot of these candles that were rejecting off of it. And I don't really see what else you could have done here except to go down to a lower time frame to see if 1221 crossed down. So that's why I say Harsey is a pretty good indicator. Even Engineering Robo, which is a paid indicator, gave it to you a little bit late. But hourly is not really. It's kind of tough on the hourly because you're going to get your move by the time the indicator's already popped off. I mean, it's still a pretty good indication, because usually when these happen on Engineering Robo, you just wait for this thing to come back up and reject one more time. So I think there's a play to be had here where it'll come back up and retest around this $5 mark. And if that happens, this is a great place to short. And just be aware they may try to wick you right here before it moves down. But if you stick to your guns, as long as a candle doesn't close back above $5, then I think you're good for that short. So, that gives you a play if you like to short. And then another thing you can do, obviously, is go ahead and put you a trend line there. If you get a break below that trend line, and if it comes back up and retests it and then rejects again, then it's probably another short right there that you could take. So just be watching for this stuff. I mean, there's plenty of ways that you can approach this. These are the ways that I approach it. It's not 100%, but it can make you some money. Okay, I think that's all I wanted to say. Just remember, if you get a breakdown like this on a short, look for it to come back and reject near here, because there is an order block right there. It's actually a little bit higher than 5. Could be all the way up to about 510. So just be aware that if this short does happen, it could even come to right here and then reject. Yeah, I think we've got some good shorts coming up, and I don't say that because everybody should do it. Only advanced traders should do it, or people that are very careful with their money. You have to understand to only put in 1% of your total portfolio. If you can stick to that, you'll be successful. But don't go blowing your whole account. If you've got $10,000, you should only be putting in about $100 per trade. But I know not everybody has that much money. So I would say in those cases, you probably just want to be playing spot. So if you're not experienced, don't be shorting or anything. But this is something that you can practice on your own for in the future and learn how to do it. Okay, I'm going to end it there, and we'll go over some more in the future. Just go ahead and hit like on this video, and make sure that you go on my Twitter at Bike4Sale, and it's this one right here, and join that so you can see my plays that I post. All right, take care.